Hey everybody, welcome back. This is of course our channel membership live stream. We have it once a month, so this is going to be fantastic. We do have a topic, but we also will answer, or not we, I will answer any questions that you guys have in chat. So hopefully most of you have recovered from the previous live stream, because this is our second live stream in one single day. So that's pretty darn cool. So the topic, of course, for today's live stream is, well, share buybacks. So I had asked you guys what you wanted to talk about, and then we had a few come in. Share buybacks was one. Another, I think, was swing trading. Now I am planning on doing a dedicated video on swing trading. So share buybacks looks like the one that we're gonna go with for this stream. So we will get to that in just a moment. First of all, channel members, I want to thank you guys because you guys help support the channel, and it goes a long way when you guys are, it may only be the price of a cup of coffee every month, but believe it or not, that adds up, and that certainly helps the channel big time. Probably about 50% of the revenue that we get on the channel comes from the channel members. I do not know how many people are here, Ian. It hasn't updated yet to tell me how many people are here. Right now, it's telling me there's 0 people here, but obviously you're here. Whoops, I should put up your thing there. Anybody here beside me? Yeah, absolutely. If anybody else is here, give Ian a shout out so that Ian doesn't feel like he's all by himself. But, oh, there we go. So there we go. So there you go, Ian. You have Enid here with you. There's probably a few more people here too. Joe is usually almost always in the background lurking. So, you're definitely not alone. So, what was I going to say? Oh, right. And plus, this time around, we've got all of the people who've been winning free memberships, and that's huge. It gives them a chance to come in, see what it's like, see what's happening on this side of the membership line, and that to me that's pretty darn cool. Oh yeah, look, we got Mario in here. We got Jonathan in here, who I like big buybacks, and I cannot lie. That for some reason the name Joe Cocker appeared in my mind. I think there's a song that anyway. I think that might sound like a song that could have came from somebody of the Joe Cocker stance. I don't even listen to Joe Cocker, but I had a friend who listened to Joe Cocker a lot, and so I absorbed that through a diffusion of some sort. Ian says 4 likes, so it's not just me. There you go. There you go. Absolutely. Now, let's see. Oh, Sir Mix-a-Lot. Perfect. One of the big differences with these streams as well is I don't monetize the channel member live streams because I mean you guys are already contributing to be here, so I'm not gonna throw ads at you. So I turn the monetization off for these streams because hey, it makes a lot of sense. And a lot of you guys will watch this in the replay. And the beautiful thing is, even the new channel members are like, for example, when Skiz finally when Skiz finally wins a membership. He can come back and watch this. So he, you can do all that fun stuff. So we gotta say that. I liked twice. Oh, Enid, if you're watching me with 2 computers, it's like I'm in stereo. If only I could somehow coordinate it to do right side, left side, that would be kind of fun. All right, so let's start talking a tiny bit about these share buybacks. So in a nutshell, I mean, a share buyback is when companies buy back their own shares from the marketplace. So this has, of course, the immediate effect of reducing the number of outstanding shares that they have. So, and as you guys know, outstanding shares, that certainly comes into play when it comes to looking at their market cap. You can, from those 2 numbers, come out with their actual share price. So, you can see that some stuff is going to happen here. Now, there is about 5 big reasons why a company is going to look at share buybacks. Well, let me just pull this up here. Ian says, I have had YouTube Premium for years. I forget what commercials are. And Enid hates commercials. I will tell you this about, it's funny. So when somebody with YouTube Premium watches, I still get a little bit of money from your view. but not as much as somebody who watches without YouTube Premium and then watches an ad. That's where the bigger money is. But obviously, down the road, once I'm big enough and once I get the right sponsor, I would certainly like to start looking at that. Oh, look at this, Vic taking advantage of his membership. He won it at the last second of the last stream, and here he is. Welcome, Vic. Good to have you. Okay, so back to those share buybacks, and we're going to move back and forth because if there's questions in the chat, we're going to deal with them, and then we'll move back into the share buyback. So there are 5 main reasons that a company might want to do some share buybacks. One of the first is that there's this little stat called earnings per share, so EPS. When you do share buybacks, what it does is because you all of a sudden have fewer shares, your earnings per share goes up. So what this can do is it can sort of, it's kind of, I don't know, it's kind of fishy, but it's not. It makes it look like you're more profitable than you actually are. So sometimes if, for example, a company is concerned about, let's say a credit agency or something who's giving them a rating, they may do something along this line to knock up that EPS. So that way there, it looks a little bit better on paper. So that's one definite reason. Another reason that, I guess our second reason, we might as well number them. The second reason one is that it is a good signal of confidence. So it does indicate that the company has full belief in their stock and that they feel that it's undervalued. So it shows, overall, it shows a positive outlook. So that's kind of a good thing. A third reason is sometimes companies have excess cash and they just don't know what to do with it. So they basically buy their own shares. So this returns the value of that cash to the shareholders. So especially if you have a company that doesn't have dividends, it doesn't really have a way to reward their shareholders, buying back shares is definitely a way they can certainly do that. I guess that was number 3. Number 4 would be to optimize capital structure. So once again, it's all about those stats. So it will help improve their debt to equity ratio. It can actually, potentially, it can overall improve their financial health. And that's one of those things that companies really like to do, because it makes the whole business of running, makes the whole art of running their business a lot easier when your numbers and your fundamentals look better. Plus, if they end up in one of my deep dives, they'll get a better rating from me, right? So it kind of makes sense. The last reason, so I guess number 5, is that it does support the share price. So less supply in the market will, of course, raise that share price. So sometimes that can be a good thing. So well, before I get to that, let's just quickly say hi to Trevor, because Trevor's here. And just Enid gave a quick congratulations to Vic on winning that last second membership. So very, very cool. I like that. That was fun. That was definitely fun. Excuse me. And I do have coffee. I have more coffee now for tonight. So we will keep the party going. Mary's in the house. Hi, Mary. Good to see you. Okay, so what happens to the stock price during a share buyback? So obviously, the first part is, well, it's simple supply and demand. So a reduced supply means that there's going to be, an increased demand. So as a result, that can raise the price. So it can be a good thing for that, that reason. Now, it also does create a whole perception of value. So buybacks can certainly, and I kind of mentioned this in the first one, but it can suggest that the company's undervalued. And that's potentially it will make investors take note. So investors may start looking at the company a little harder and maybe bringing their wallets to the game. So also, of course, the financial ratios, and we already talked about that. So it will increase things like EPS, and it can make, just overall make the company look a lot more attractive when it comes to a buyer. So that's a good thing. Now, something as an investor, something that we do need to sort of keep in mind is that there's no guaranteed impact on price. I have seen situations where a company has bought back shares and the price has fallen. It can happen. Sometimes you just never know what's going to happen, but for the most part, normally it is going to go up. But a lot of times, depending on other market catalysts that are happening at the same time, the price could stay flat. It could go down. It could be a situation though that if you think about it, if they didn't do the share buyback, the price that fell down might have actually fallen a lot more in response to whatever's going on at the market at that time. Another big consideration is that sometimes people can take a look at a company that's doing this a lot, and they can say, "Well, they're just trying to inflate their share price," and that can sometimes lead to even more scrutiny. It's like if a company's doing it and you don't understand why, you're probably going to do more due diligence, and maybe in that due diligence, you start to realize, like, let's say for example, somebody does a share buyback, the price goes up, and then there's a whole bunch of insider selling. That would come off to me as being almost kind of scammy in a way. So I would be a little concerned if I saw that. So just keep that in mind. These type of things can happen. Um, let's see. So what about some risks involved with share buybacks? One of them is that you can get yourself locked into a very short-term focus. So when you're seeing a buyback, not a shyback, maybe I don't even know, is there any such thing as a shyback? No, I don't think so. But, well, maybe a back that doesn't want to be seen. Kind of, anyway, I'll just leave that one alone. It puts you in a very short-term focus on the actual stock. So buybacks, they may prioritize short-term stock prices over the long-term investment strategy. So if you're a long-term investor, you may want to be focusing more on that long-term and not really on that short-term. The other problem here is you can sometimes run into a situation where you have shareholder value versus reinvestment. So concerns over prioritizing. Learning how to talk again. It's because I've been talking so much today. But concerns over prioritizing shareholder returns over reinvesting in the company's growth and development, that's kind of another little issue that can certainly pop up. The other one is market manipulation. Sometimes there can be a concern that that's what they're doing. They're actually manipulating the market, and it's not really that they're doing it for the company's health. So buybacks, they can be perceived as a means to manipulate market prices, raising regulatory and ethical questions. So keep in mind, you remember that example I gave where I said after a buyback, all of a sudden there's a lot of insider selling? To me, that would raise a huge red flag when we're looking at it that way. But now, as a shareholder, there are, of course, benefits. One of them is the immediate returns. So if you're holding the stock in a company and then they buy a bunch of shares back, and you do get that pump, which you more normally do, that's more often you'll get that pump than you wouldn't. That's an opportunity to take some profits. Because keep in mind, the way things do work is whenever there is something, a catalyst, for example, a share buyback, that price is going to pump, and it's going to pump too far, and then it's going to come back down. So, I mean, if you time it right, you could sell towards the top. Now, this is where it's important. You have to remember that if you're in your TFSA, if you do sell it at the top, you can't buy it back the next day. You have to wait 30 days because otherwise, otherwise they'll look down on it. They'll look at it like it's day trading. So you don't want that to happen in your TFSA. So that's definitely a big thing. I guess the only other thing I do want to talk about when it comes to share buybacks, because it's not a hard topic, and then we'll just chat about whatever you guys want to talk about from there, is we have a new tax in Canada. So in the 2023 budget, the government came up with this new tax. Basically, they're going to tax 2% of the net value of all repurchased equities, which basically means if a company decides to do a buyback in Canada, so a Canadian company, they're going to get taxed 2% on the net value of that buyback. So if they buy back, let's say they spent $1 million. Well, if they spend $1 million buying back, and I just use that as a simple number, 2% of a million's going to the government. So I don't know. I think this is just a part of the way of the government to sort of try to recover some of the deficit they've created over the pandemic. So just sort of keep that in mind. I don't think that's really going to stop them, especially if you're looking at if it's only 2% and there's more benefits for the company, they might still do it, but they probably won't arbitrarily do it. And you're still going to see this. I think you see it a lot in the US. Now, one company that actually does this every year, and we'll have to see if that changes, is Canoe. So Canoe has this annual redemption, and that annual redemption is basically a share buyback. So, they only have, and they have a limit on the annual redemption. We're only going to buy back X number of shares. And I've never quite understood why people will do it, because normally they'll say, we'll buy it back at 95% of the NAV on such and such a date. Most times I've looked at it, you're better off to not sell your shares back to Canoe in that case. So it's just one of those things to keep in mind when it comes to share buybacks. Now, have any of you guys ever ridden like a share buyback up and picked up some profits from it? Be kind of curious to hear if anybody has. I don't think I actually have. It's funny. I'd be the first to do it, but it just hasn't really happened. So at least not in my case. So that's share buybacks. So that's going to be kind of cool. All right. So that's our topic. I just want to put that out there. It's a nice, simple topic. Throw some stuff in chat, guys. Whatever it is you guys want to chat about, we will do that. In the meantime, I don't
have an answer for that. Is there something else I can help with?
No, I don't think there is. My watch wanted to get involved in the chat, but that's kind of par for the course. So coming up, we got 2024 coming up. Keep in mind too, the last video of the year this time. Well, actually, it's the last video of every month. You guys get to choose what it is. I've got some great ideas. If you've got a last minute idea, because I'd like to get the poll up tomorrow, just go over to the community tab and you'll see it's a channel membership post. Me asking for ideas. Throw something up there because I'm going to get that out tomorrow in a poll, and then you guys can vote on what it is I'm going to do for that final video. I don't know what it's. I think it's next week, next Thursday or something like that. So that is going to be, I think, a lot of fun. So that's coming up for sure. Let's see. Oh, Ian's got himself a question here. How long have you been buying stocks? I bought my first stock March 13th, 2020. Ooh, that was right around the pandemic drop. So hopefully you got a really good price, Ian, on that. I'm curious to know, Ian, what was the first stock that you bought? In my case, it was Fortis. So yeah, I also started, early in the pandemic. All of a sudden I had time away from work and stuff, and I was able to sort of say, oh, let's take a look at this investing thing. And I do what I always do. When I decide I want to learn something, I read some big books, and I just absorbed a ton of information. It's kind of funny. I'm very good at absorbing information, so that to me was just kind of a cool thing. And even after I had been 6 months into investing, people were looking at me like I knew everything. I'm still learning. I will always be still learning. To me, if you have an investor or an investing guru or an investing educator, whatever, if they've stopped learning, they've stopped becoming useful, because this is a market that changes a lot. So we definitely have to see that. So you want to be growing. Okay, let's see here. Mario says, I see so many companies that have the options to buy back stocks, but end up not buying them. Yeah, sometimes that'll happen. I mean, sometimes a company will be planning stock buybacks. They'll announce that they're going to do stock buybacks, and they just never do. Because, well, things change, right? You're not 100% until you've actually sent out details with dates and things. Then it's more of it's more in stone, but you can change if the situation changes or if the market changes. It happens a lot. Sometimes a company will say as well, we're planning some stock buybacks, but then they'll go to the board and the board will be like, nope, that does happen too. Do you think the new tax will dissuade Canadian companies from buying back stock? Um, I think it will get rid of some of the frivolous ones, but I think there are situations like, for example, if they really want to improve their credit rating, or some other statistics, it may be worth it. But they'll weigh that. They'll definitely weigh that. So you'll see less buybacks in Canada. Absolutely. You throw a 2% tax on it and people will do it less. But they're still going to happen. Ian says, okay, I bought over 30K. Holy banana bread, Ian. That's a big first purchase. I bought 30K worth of BMO. I was like 2% off the bottom. Over doubled it. 2% off the bottom. My God. So you basically turned 30K into a big chunk. That's really good. You are lucky to get in there at the right time. But I mean, that's the thing. I wish I had been buying during that March. I think everybody wishes they'd been buying during that March because ah, that was I mean, technically that March was a recession. That tiny little and it's funny, it's that drop. It's such a cool drop. Let's see. And Mario bought DNF. Nice. Trevor started, that's when I started too. So Air Canada, CTC, so Canadian Tire. Oh, and Air Canada again. Yeah, Air Canada, I think, is a good stock. I mean, it's down, and you need to have some patience with it right now. But um, here's the thing: you need to. What am I thinking? You need to just wait because I think Air Canada, like they have enough money, like they've got a lot of money that they can stay completely unprofitable for like 3 years and they're going to be fine. And I think within 3 years they'll get things turned around and they'll start making a profit again. Right now, not so much, but I think part of it is that as the economy gets worse, there's a lot of planes flying with a lot of empty seats. So that's one of the reasons that air travel is becoming a little bit cheaper. At least domestically. International is a different story. Let's see. Mary says, "How can I get my kids educated? How did you start?" Um, I mean, when I look at my formal education, Mary, investing in business, none of that ever came up. I mean, but then again, I was on the science route, so I went to university. I did a double major, biology and chemistry. Um, After that, I worked in a lab, and then eventually I decided to get into management. So I left science, went into a management track. But yeah, it was more or less as the pandemic started. I had all this extra time on my hands, and I was like, okay, well, what do I want to learn today? And I actually stumbled upon an interview at one point with Kevin O'Leary, of all people. And he was just talking about compounding. And I was looking at it and I was like, oh, that makes a lot of sense. I should learn about that. So I started, like, the very first book I read, quite literally, was one of the dummy guides. So I think I got the invest Canadian Dummies for Investing. I started with that. I read it cover to cover, started digesting. I guess, some people call it YouTube University, but I started, going in and listening to a lot of different videos, getting a lot of perspective, keeping note of things that I understood, things I didn't understand, then researching the things I didn't understand to sort of build up my stuff. And I eventually decided I wanted to do YouTube, but before I did YouTube, I actually sort of, I started as a viewer, and I got myself associated with some channels, did some background work for some YouTubers, like for example, Hyrai. I did some work for him, and really, got myself to the point where I'm like, okay, I'm ready. I'm ready to fly. And that was like, oh gosh, that was 2 years ago that I was ready to fly. Well, a little over 2 years ago. And since then, I've just continued, and I continue learning. I'm always learning. Like, so every so often, like, here's the thing, I answer every question I get, but I sometimes get some doozy questions. especially when it came to retirement. So when it came to retirement supports, I had did this one video. It's my most popular video on the channel. Like it's got 14,000 views. So it's just out there. But sometimes I get some doozy questions. I've seen some questions I've had that popped up on that video where it's taken me 30 minutes of research to get an answer. um, but that to me was just, that was just fantastic because it's like, okay, I'm learning. I'm always learning and, coming along. And luckily for me, I'm very good at learning. I would call myself a professional learner in that sense. Um, so yeah, it's been an interesting journey for sure. And Ian, in response to the luck, yeah, it was beginner's luck. I sat on the fence for a long time before the drop. Well, you know what? That was a good move. I mean, in hindsight, nobody knew that you were going to have that giant drop. But the fact that, you're sitting on the fence thinking, oh, should I start doing it today? Should I start doing it today? And all of a sudden, you get the drop of drops. And that's like, yeah, like I'm pulling the trigger right now. That's fantastic. That's really, really good. Let's see. Buying stocks for me is a hobby and a habit. It's a hobbit. Oh, that's funny. That's funny. Uh, you're gonna have me talking about this joke for a while. Did you catch that talking? Anyway, I just had to throw that in there. It's kind of one of those interesting things, and I also think too, like my style is it tends to be on the witty side. I like to be witty. I like to be memorable. It's kind of like, and I've said this before, and some of you are like, "Uh-oh, here comes the field story again." But I'm going to give you the field story because, heck, you know what? I like telling the field story. So it's this thing: when you're out driving along, and you drive past a field. 10 minutes later, if I were to ask you about that field, you'd be like, yeah, it maybe it had grass or snow. I don't know. But if you're driving by a field and there's some naked dude running across the field, well, God, you're never going to forget that field. I mean, you'll be 80 years old in a rocking chair and you'll be like, let me tell you the time I drove past that field. So it's kind of, I use that as my teaching style. So what I like to do is through, just being animated and throwing in the odd little quip and joke. I use that as a way to make it a little bit easier, to make it a little more memorable. Because let's face it, finance content is dry. I've seen some channels. There's channels out there. I'm not going to name any of them, but there are channels that, if I was having trouble sleeping, I probably would turn them on because, the dry monotone delivery is gonna. Oops, I hit a wire. I don't know. I can't even get it over to the thing. There's a little wire here from one of the other lights. But yeah, that dry monotone finance content can sometimes be boring. So I try to liven it up, and that's where things like banana bread come in, and not too shabby, and some of the little catchphrases and excitement. And I try to make it a little bit more exciting, which is kind of good. And Trevor is not laughing at my joke, unfortunately, but I'm not sure what Trevor is laughing at anymore. From the Shire, yeah. I mean, I don't know about you guys, but I mean, The Lord of the Rings was an incredible book. I remember that was one of the first really long books I ever read growing up. Like, and that came because we every day in school, when I was in elementary school, the teacher read, a couple pages or so of The Hobbit. Well, probably more than a couple pages. We got through it in the year. Took the whole year to get through The Hobbit, but that sort of introduced me to Middle Earth, and I was like, oh, that was kind of cool. And then I found out, what? There's this 3 series book called The Lord of the Rings. And I remember, because I was like, oh my God, I was probably about 11 when I read it. And, there were so many characters and trying to keep track of things. But now as an adult, I look at it and I understand all the connections. And of course, the movies were fantastic. I did love the movies. And Ian says, never saw the movie or read the book. You just know the pulp culture. That's That's pretty good. Well, that's funny. Like, there's people out there who, for example, have never seen Star Wars ever, but yet they know what use the Force means, and they understand the reference to, I am your father, all of that fun stuff. So they get all of that. Jonathan says Oracle bought back 40% of its shares over the last 10 years. That's a lot. That's a lot of share buybacks. But it can be a good thing. Some companies will do it. Now, of course, on the other end of all of this, you got things like, share splits and things like that, because some companies will go that route as well. I mean, Tesla recently did a share split, um, which is nice because when you do a share split, let's say if you do a 2-to-1, which basically means that if you had 1 million shares, you've now got 2 million shares. So if you're holding a company and they do a 2-to-1, if you have 10 shares, all of a sudden the next day you come in, you have 20 shares, but they're worth exactly half. So you still have the same money. But some companies will do that as well. A lot of times it's because if their share price keeps getting bigger and bigger and bigger, it becomes a barrier to people trying to invest. Like, yeah, I know over on Wealthsimple you have fractional investing, but not all brokers provide fractional. For example, over on National Bank, I mean, even though I love it, they do not have fractional shares. So if I want to buy a share, I have to dole out the whole amount. So when I bought CN, I had to pay for a whole share. And that was kind of challenging in the challenge, because the challenge I'm very limited by the amount that we set up for that. So that's an interesting thing. Ooh, Ian has a video idea. Stocks not to buy in your non-registered accounts. Uh, okay, so yeah, so like what stocks should not be in your non-registered account? That's a really good idea. For some reason, I feel like Canadian in a T-shirt has done a video of that nature, but that would be a great video to put into. Well, here's the thing, Ian. If you want to put that on the community tab, I will put that up for vote. But if you don't do it, if you don't want to, that's cool too. But I'm probably going to cover that in the new year as well. So I'm trying to look at the format, because here's the thing. I've kind of fallen into the whole list on Tuesday, deep dive on Friday, list, deep dive, list, deep dive, list, deep dive. I'd like to throw a few more different types of content in there as well. Now, I do keep in mind, like I know every time, even though I love doing educational content, so I love doing a content like explaining what something is, or, like one of the ones I loved is when I did this one video on the VIX. It's one of the worst viewed videos on my channel, but I did love doing it. And so I do want to try to start putting a few of those in, and, sprinkle those in a little bit, and see how that goes. Now that I've more than doubled the subscriber count since then, and more than, so at least now when something bombs, it still picks up at least a couple hundred views. But, it's just one of those things I'd like to do, just a few different things. And I also love the fact that, you guys choose that last video. That to me is really, really cool, because then it's not so much that I'm giving back to you guys. Sometimes you guys may just come up with a topic. I'll do it. And maybe that's where my next viral video will come from, which is kind of weird. Like I have, after the viral video I had, and, 14,000, that's a viral video for what we are for a small channel. I've done other retirement videos. I've actually done retirement videos that I thought were much better than that 14,000 video. But nope, they're just not exploding the way that one did. I don't know what it was about that one. I've analyzed it to death and I can't figure it out, which is kind of funny. Vic says, smoking is an addiction, but investing is similar for me. Okay. I can understand that. I mean, investing can be an addiction. It's nice to, I mean, if you think about gambling as an addiction, now investing is not gambling. Well, maybe it could be if if you're playing, penny stocks, for example. But I can see how that could happen. I could. Jonathan says, what do you think of companies that dilute their shareholders with lots of stock-based compensation? I'm not a huge fan of dilution. So, for example, when Air Canada entered into the pandemic, they actually did dilute their stock quite a bit. So that's one of the reasons that it's going to take them a long time to get back to pre-pandemic share price levels. They'll get there, but that dilution is it is. I can understand why a company does it, but at the same time, I don't like it as an investor. So when I'm looking for a stock, if I see a significant amount of dilution, especially a history of it, I'm probably going to pass up on that company. Vic says, I do like the rush of a swing trade, but hate the withdrawal of a loss. Yeah. Well, that's the thing, though. It's great when a trade is super successful and you make a nice big profit. But yeah, I mean, the opposite is true when you go down. But the thing is you have to, it's okay to feel the emotions, but you want to make sure that they don't rule your trading. So for example, if you have a very successful trade, you don't want to just double down on it because, be smart, take your money, work, do your due diligence before your next trade. Don't just assume that, oh my God, I'm on a roll. Let's just let it flow. Don't just take your profits. And the same thing is when something goes wrong, don't eat it. Don't eat it up. Just say, okay, well, now I know what, I know that didn't work. Let's just move on. And don't get yourself into a situation. I've seen people where instead of using a stop loss, they just let themselves go down and down and down. And if you're a long-term investor and it's a good company, well, that's fine because you're going to recover eventually. But if you're trying to do short-term trades, letting something flow down too far means that you've put yourself into a situation where you're just not going to be able to sell that stock, and you've tied up a bunch of money on the table that you can't use for other trades. Or you eventually do give in and say, I got to get out of this hole, and you take a big loss, and then, unless you're tax loss harvesting, that can hurt. Vic says, if I worked for a great company, I want to share in the stocks. Yeah, that makes sense. Especially if you work for a company that has like a share program for employees. Sometimes they do. Some companies will actually give you shares. Other companies will give you discounted shares. So there's different options like that. Vic says, my cousin twice removed got a new job with a company, and I asked if they got any stock options. Exactly. That's what I was exactly what I was talking about. Vic says, if you bust your behind for a successful company, you want a piece. Human nature. So I understand stock-based compensation. Yeah, absolutely. It's one of those things. Like, also, it's interesting. I once applied for a job with Shake Pay, because I thought I would do that on the side. Now they actually pay in Bitcoin. So I was thinking about it. It's like, oh, okay, if they, if they pay you your X, let's say you make $2,000 a week. So if they paid you $2,000 in Bitcoin and Bitcoin had a good day, you could then cash it out and maybe end up, getting paid double what you normally get because Bitcoin just went on a run. Well, maybe not double, but you know what I mean. I always thought that was kind of interesting, but at the same time, it could also go in the opposite direction. Like you get paid your 2,000 in Bitcoin while Bitcoin's in the middle of a crash, and you're like, oh no. Sometimes you can't say to your landlord, well, Bitcoin crashed, so I can't pay the rent right now, but I'm sure it'll be back up in about a week. I'll give you the rent then. So Enid says, what do you guys think of the new IPO ICS integrated cyber solution? It's a good question. It's a good question. I don't have any real opinion on it right now because I haven't looked that much into it. But, and Enid says on CNSX. So I haven't looked too much onto it. But if any of you guys have, feel free to chime in. Ian says, buying stocks teaches me humility because I'm not very good at it. Absolutely. Well, you learn, it's an interesting thing. You can do everything in investing. You can do absolutely everything right, and still have a bad still have a bad result. It can happen. And likewise, you can sometimes make a crap load of mistakes and still have a good outcome, depending on the market, because sometimes the market is the master of everything. So, and Jonathan says, I avoid IPOs like the plague. And that's kind of true. I've noticed that unless unless I have a really good reason, I do tend to stay out of IPOs. So, for example, with this ICS integrated cyber solution, I don't know enough to know whether I'd be interested. But normally, what will happen is the IPO will start at a nice high price compared to where it's going to end up. And it might go up a little bit initially, but then it will go right down. So what I normally would like to do with a company, and if it's an IPO and I'm interested in the company, is I might, give it a week, give it 2 weeks, see what's happening. Let that price settle down and then buy in at that bottom because, otherwise you might be sitting on those stocks for a bit of time while you're waiting for the price to come back up after the initial hype of the IPO. So yeah, it's just one of those things. I don't get too excited about IPOs, but there's a couple of companies that, you know, and I hate to say it, but SpaceX is one of those companies that if they IPO'd, I probably would get in right away, only because I can see the potential of the company. I mean, keep in mind, I'm talking about the company. I'm not investing directly in Elon. Elon's gotten a little bit strange in 2023, but I still think SpaceX is gold. So it's just one of those things. Like I think no matter how strange Elon gets, SpaceX is probably fine. So just keep in mind. Now Enid said 34. Okay, started at 34 cents on November 9th. So where is it at right now? That's what I would like to know, Enid. Has it dropped since it came out? Because that's what does happen a lot. I've seen that with a lot of different IPOs. I'm trying to think of one. There was a big crypto one that not that long. Well, probably about a year ago. I don't know. Was it Coinbase initially? It was one of them. They definitely went down. Okay, so right now it's at 34. But what was it when it launched? How high was it when it launched? That's the question I have. So let me see here. Well, let's see if I can find out. Let's check this out. ICS, Integrated Cyber Solutions. Okay, so it's at 35 cents right now. And, oh, seriously? Yeah, it's not even giving me data. Why is it not giving me any? Oh, here's a little bit of data. 1 month. Okay. Okay, so it actually started at 35. All right, so this is kind of interesting here. Hold on. Let me pull this up so you guys can see it. Share screen, window. Here we go. Share. Let's bring this up here. So as you can see, it started off nice and high at 35. And look at this. It came down and then we had this whole big crash all the way down to 28. So this is that worry that I always get. Now, some companies will do this and take a lot longer to come up. Now, this one has come back up pretty fast. So, definitely more impressive than I was expecting. So interesting. And let's pull up some other data here. I'm going to go into their key data and take a look here and see what we got going on here. All right. So we really see it's so new. We don't even have any of our ratios or anything on it. This is CNX. I don't think, let's find out. I'm going to try over here on Simply Wall Street to see if it has it as well. So what was that? CNX. Let's see here. CNX Resources. Let me just make sure I have it right here. So CNX, yeah. So it's not even showing up yet over on Simply Wall Street. So that's not fun. All right, let's remove that. Okay, so yeah, there we go. Launched at the same price. Yeah, exactly. You found a good. I love this, Jonathan. You found a good company slogan for SpaceX. No matter how strange Elon gets, SpaceX is probably fine. I like that. That's definitely good. Ian, how bad is it to hold EIT in a non-registered? I have 1,300 in mine. I like the 9% dividend. If I sell it and buy something paying 6.5, am I really gaining? What will happen with EIT is sometimes you will have, if you're not selling, let's just say this, if you don't sell your EIT, if your EIT is just sitting there and it's a passive income generation, um, it's not that bad. You are going to, of course, pay some taxes on that dividend. But what happens is sometimes with EIT is you do get, um, it's kind of a form of return of capital because their average cost base will sometimes start coming down a little bit. So when you look at a capital gain, if you were to sell it in a profit, you would end up paying a little bit more of a gain than you would if you had it in a registered account. So that's the whole thing. If you plan to never sell it and just let it sit there and continue to eat up the dividends, you're just gonna, the only real ramification is that those dividends are taxable because they're in a registered account. So that's the thing. It's on Quest Trade only. Oh, interesting. So that might be, it hasn't just, hasn't quite propagated to a few other brokers. Sometimes that I notice that with Wealthsimple, some of the newer stocks, they sometimes, won't take them right away unless they're from. So for example, if you've got a big, like let's say if Hamilton comes up with a new ETF, that's probably going to be on it's going to be on Wealthsimple right away. So they tend to move a lot faster. So that's not a bad thing. So, one of those things just to sort of keep in mind. All right. Any other questions, guys, before we end this? Throw them in quickly. Sorry. Oh, that was just good. Drinking a little more coffee today than I normally do. So watch 3 in the morning, I'll still be awake going, why did I drink so much coffee? But we'll have to sort of see how that goes. So I am going to be back here again, of course, tomorrow. We're going to do that. I'm really liking these closes. I think they're a lot of fun. So I'm glad that we still got a whole bunch of them in front of us. And I do want to incorporate them into the new year somehow. So I have to take a look at that as well. It's that whole let's figure out what we're doing in the new year thing. I really, and I also want to I want to find ways to more enhance the whole channel membership size. Because, I want it to feel like when somebody puts down that $2.99, I want them to feel like they're getting their money's worth. So that's going to be another big thing is the way to polish it. I got to get working on emotes. So I knew you were here, Joe. I knew you were here. Look at this. Here's Joe. Remember, getting to the stream, I said, Joe's here. He's just lurking in the background. He's always in the background. I knew it was, and this is actually, the share buybacks. Joe actually is the person who suggested it. So, way to go, Joe. Yes, it was great indeed. Awesome. All right, guys. Yeah, I guess between the two, I'm at the point where my mouth is saying, I don't want to talk anymore. Wait till I have to do that open to close. That's going to be fun. Actually, it probably won't. I think once I get going, I'm going to be fine. But that will be a lot of fun. And you never know how quickly that will come. It's really interesting. You know what I think? It still shows me that there's nobody here. Like it shows me 0 views, but I think it's because it's a channel membership and it's not on the public. So it doesn't show me exactly how many people are here, but I'll see that later in the stats. And it doesn't matter, whether you're here or you're catching it on the replay. It's up and ready for everybody. Look at that. Yeah. We'll leave it at this. We're ghosts. We are the Christmas ghosts. I'm the ghost of Christmas past. I want to take the past. Enid, you can be present, and Joe will be the ghost of Christmas future. And that, I guess, that makes Ian Jacob Marley. Oh well. Anyway, oh dear. You see, I'm getting a little bit loopy here when it comes to the end of the stream. So anyway, thank you guys once again. Thank you, channel members. You guys absolutely rock, and look forward to a lot more of this and some other great stuff in the new year. And I will be reaching out to you guys soon for input on all kinds of stuff because, your opinions matter to me. All right. Well, with Jonathan saying thank you, that's enough. We're going to head on out. Take care, everybody. Have a good night. It's getting pretty late, at least on the East Coast. It's like 8 o'clock. But anyway, take care, everybody.